Hi, this is Simon with Trade and Perform Coaching with Friday's trade review for October 25th, 2013. Just quickly, this is for educational purposes only. Nothing in the video, on the blog, or on the Twitter stream should be considered a trading recommendation. So if we look carefully at Friday, what was the game plan to start with? I posted it for everyone to see late in the afternoon. Obviously, I sent it to my clients in the morning. So the plan was, first of all, to look for longs from good rotations down. All right. Number two, the market's definitely in a bull market. The easier side of the market has been to the long side. Now, the first hour might be opening drives up, open drives down, but through the course of the afternoon and after the first hour, the easier side of the trade has been to the long side. So, with a calm mind, right, one of the issues that happens to a lot of traders when you're trading is it's difficult to switch from trend days to balance days, which is essentially what we had with a bit of an extension at the end of the day, right? And part of the reason why that's difficult is because we have no idea of, well, if the exception becomes the rule, which is trend days are usually the exception, they become the rule. How do we shift gears back and forth? Well, we look for clues to begin with. So the first clue for me in the morning was that we had completely if you look on a 5-minute chart, this is totally uh, non-market open, non-market driving type conditions, right? We're just whipping back and forth in very quick succession, right? And this is a great way to get chopped up. So one of the ways that we've dealt with not getting chopped and not getting run over in a short or a long in the first 5 minutes is kind of taking a step back and letting the market, watch for the first 15 minutes. Let the market kind of give us a gauge of what's going on. Okay. So some of the other clues that we were looking for, if we're going to have a down day, right, the first thing that we need for not having a down day is that we need to get below the prior day's close, which would be right here. That would be the first test that we would need to accomplish. And clearly, off the open, we're rejecting off the prior day's close. We're not even getting to gap fill, right? So that's the first sign that we might have a move to the upside. Secondly, if we look at tick, I'm not going to go into all the ways that tick gives us important information, but one of the ways is we never really got a negative tick in the first half hour. Look at that. Just like on a 5-minute chart, almost all of them are above zero and looking pretty strong. So number two clue that I don't want to be too quick on the short. And the other thing that we're looking for is if we are going to short, we want good rotations away from the close or from where we've been trading. So if we look, we closed at approximately 1748 and a quarter, and we rotated all the way up to 1754. So let's just call that a 6-point rotation. Not fantastic, but certainly better than shorting a 2 or 3-point rotation, and it gives you good location. I wouldn't call it a perfect short setup, but reasonable, right? If you were looking for us to trade back down. On the negative side for the short was that we are above prior day's close, and you're really going to need a good rotation down to make that work. In this case, the other side of what was working in your favor on the short was that the tick, while not being negative, also didn't manage to get extremely bullish either. That was certainly a big help as well. So, but here was the key as to why we said let's look long. If you look at the balance of the day, right, this is what you had. We spent a brief amount of time above the open, right? Then we came down and got below the open, and we chopped around. If you look back from the top, we had 1754, right? And we rotated all the way down eventually to 1747. Again, given the environment and what the tick was telling us, which was we were in balance, right? So in balance, we're not looking for a directional move either way. What everyone kept trying to do was push below, push below, push below. And finally, when they push below, you see this rejection right here. And you see tick divergence right in here, even on a 5-minute chart. It's pretty easy to see. And, that is such a beautiful setup. And I even called it out where we had tick divergence. Actually, I called it the back of the zone, 1748 and a quarter. And then look at this, from 1748 and a quarter all the way up to 1752 and a quarter, right? It's a 4-point trade. Consider the range for the day as to how healthy that trade was, right? So the opening range in the first hour was basically 1749 to 1754, a 5-point range. That's pretty tight. if you can capture a 4-point trade off of what was initially a 5-point range and expanded off out to about a 7-point range, and you capture 4 of those 7 points, that's huge. That's a good day. You can't get much better than that, right? And then the other part of the plan, and you got to keep the plan foremost at the forefront of what you're thinking, right? The plan was every afternoon the market has been drifting higher, right? So we didn't want to fade in the afternoon. And look how hard the short side of the trade was all afternoon. You had to basically nail it perfectly. And odds are, if you shorted anywhere in this mess after midway through New York lunch, right, you probably got stopped at the high of the day. Just logically, if you carried it out to its logical conclusion. So the game plan was to buy pullbacks, to focus on the long side in the afternoon, and that it's been mostly choppy with an upside bias in the afternoon as well. We haven't been driving one way or the other. And that's exactly what we got. So another issue that I wanted to address or see if I couldn't help out is I was working with a client midday. We're just kind of chatting on Skype, and he had great trade location. I mean, great. It was fantastic. He was right here at the back of the zone. But one of the keys to trading, right, is whether you've decided to short up here, go long down here, is having a reasonable stop. Now, if you'll look, even in this chop, right, most of the rotations, either way, were 2 points, where we weren't going anywhere, right? If you chased your short down and you put, let's say you thought it was going to roll over, even if you had shorted here and you put a 2-point stop, all you did was put enough of a stop for the market to come grab you and rotate back down. It's essential that you realize that the average rotation in the ES is 4.25 points, right? So most of the time you want a good stretch down and you want to give it a little bit of room behind depending on where you are in that rotation cycle so that you just don't get stopped. For example, if someone said, well, I'll take the back of the zone, but it's got to be a 1-point stop. Well, all you did was you got a great trade location, you stopped yourself out for avoiding another 1/4 point of heat, and then you missed out on we rotated all the way up to almost 1756, so you missed out on almost an 8-point trade to the upside. So what I suggest to traders when you can't get so close to the market that you think you can pick it off to the tick. Generally speaking, ES is not a trade that you can nail to the tick because there is so much volatility. There are so many algos going on in a very small area, right? That if you start micro trading it, all you're going to do is take a bunch of stops. And by the time you're done adding up the 2-tick stops, the 3-tick stops, the 6-tick stops, and you add in the commission dollars of coming in and out multiple times, you're just drilling your account lower. Instead, before the market opens, determine the areas that you want to buy and that you want to trade in. For example, for me personally, the micro white zone determined that buyers were in control. I wanted to focus primarily on the long side trade, and I pretty much called out the tick divergence down here and down here. And you also had great trade rotation. The first time we came into the top of the zone, the 17.50 obviously you got a nice 2-point rotation higher. Even if you wanted to trade to the downside, right? First time we touched the middle of the zone and we got a rotation down, you got a beautiful rotation here, right? It all depends on your perspective, but the key to that perspective is you got to leave enough of a stop to let the trade work, and you've got to accept the stop. If you don't accept that you possibly have a loss on your hands when you enter the trade, you're going to put all your energy into avoiding that stop, right? Instead of all your energy into going, where's my good trade location and what's generally the trend. The other thing that I want to point out is if you look over lunch, look how the majority of the tick is positive over lunch, and we were never able to get better than a negative 500 tick, right? That was another clue that we were just grinding, and then finally everyone who was short threw in the towel and we covered. And it was essentially a balanced day. So I'm going to keep it relatively short. The game plan was simple. Again, we wanted to trade from the long side, good rotations down, and that the last piece, we were going to clue off of NQ and how NQ traded. So let's take a quick look at NQ so we have an idea of what was going on there. And if we look at NQ, okay, we gapped up after this huge drive yesterday, right? We gapped up, and then immediately what you see here before 9:30 is that we were not driving. We did not continue to drive higher. As a matter of fact, off the open, usually when NQ is strong, it opens on that first bar and just keeps driving. Instead, what we got is some kind of wishy-washiness here in the first 20 minutes, right? Whipping back and forth. We had some data. We got the last few shorts to either come in or the last panic longs, one of the two. And then it rotated lower, right? We went below the open, and then we went below the close. Well, this told you right out of the gate, the market's not, it didn't tell you the market was weak, right? We had to get below the prior day's lows, but it also told you it wasn't all that strong. So keep all of that in mind, guys, when you're trading. This isn't that hard if you'll sit back and take a step back. If you'll develop a good trade plan, make sure that you have an edge, and then trade plan to execute, and then focus on, I need 1 to 2 good trades a day to build my account. That's all I need. Anyways, this is Simon with Trade and Perform Coaching. If you're having trouble trading and you can't get consistent, feel free to contact me. If you're not looking for one-on-one coaching, I certainly have a handful of guys I would be happy to recommend anyone to that provide great trade plans every day, and can really, whether you're a swing trader or a day trader, there are guys out there who are willing to share their trade plans, who are good guys, or not just looking to sell something, and can help you narrow your focus and inherit, if you can't do it for yourself, an edge, or buy an edge, and then develop a trade plan around that edge. But it's essential that you're not guessing every day. And if you are guessing, if you're changing up your trade every single day, in general, that process does not work and it tends to lose money. So anyone can do this, anyone can trade profitably, and I certainly hope that if you're not trading profitably, you'll take a moment to get some help from, there's a lot of good resources out there from someone. Anyways, have a great day. We'll talk to you tomorrow. Bye-bye.